Welcome to The Interest. I'm Sarah Wolak. Today we'll hear from Bill Bodnar about how last week's activity will bleed into this week's market status. And don't forget to stick around for Cage Match. Who will reign as the victor in today's round? But first, there's a reason that Carlene Graham, the Chief Operating Officer for Redwood Trust's residential mortgage arm, was recognized last year as a legend of lending. We got the chance to sit down and unpack her 20 years of experience in the mortgage industry and what it's like to be a woman in the C-suite.
Being recognized for this award not only let people know that, there is success in this business, but also that, people that look like me, that come from my background, can be very successful and can be recognized for it.
Carlene Graham started as a loan processor over 20 years ago when she started in the mortgage industry. Today, she's in Redwood Trust's C-suite as the COO of Redwood Residential.
There's so much adversity for women in the workplace that you do start to question your validity at the table, and you get this sort of imposter syndrome. I think that my advice to women is to stand strong, and my advice to these corporations is to lean into the talented women that you have and push them forward.
Graham was nominated by her peers who lauded her work ethic and dedication to volunteerism. Graham is a member of the Diversity and Inclusion Committee for the Structured Finance Association and a member of Women in Securitization. Graham also sits on the board of directors of the Gathering Place in Denver, Colorado, an organization that offers services to combat poverty and homelessness.
I think as soon as you're complacent in your life and you don't worry about the lives of other people, underserved people, I think that that's a pretty sad moment in your own life. And I think that while we can't help everyone, you can help someone. And that's what matters.
A value that Graham's colleagues say she brings to the workplace is advocacy.
Be their voice when they're not in the room, even if they're not on your team. It is all of our responsibilities to advocate for each other, especially women and people of color.
Being a woman in a male-dominated industry, Graham knows that there will always be naysayers who negate successes.
Everyone else is going to question your ability. Don't question your own ability. You know what you can do. Stand firm in your feet and believe in yourself first. And then that energy will transcend to other people. But the first thing you can do is not to doubt yourself.
To read more about Graham and other legends of lending, head on over to nationalmortgageprofessional.com and make sure to look out for the upcoming 2024 class of legends coming soon. For The Interest, I'm Sarah Wolak.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI, AI you can bank on.
Hey, everybody. Thanks for tuning in to our Master the Market segment. So we live in what we call a land of confusion. 2 weeks ago, Fed Chair Powell kind of led the markets to believe through their dot plot and speech that we were going to have 3 rate cuts. Well, fast forward to here we are after some higher inflation numbers, then that strong jobs report last week, and multiple Fed members saying maybe we're not going to cut rates at all. It appears right now that the June rate cut is sailing away and not going to happen. So that leads us into this week, and it's all about inflation. And we have CPI, PPI. You're seeing energy prices up near $90 a barrel. That's not going to be good for inflation going forward. So you have to kind of temper your optimism with your clients and your partners that the Fed is going to cut rates in June or anytime soon if those numbers this week get hot. Watch key levels. We're watching 440 at Mortgage Market Guide on the 10-year note. Have a great day. Bye for now.
Okay, Vince, I want to talk to you about the rising cost of credit reports. So we've seen our industry for 2 years in a row facing increased costs, and this is not just on hard pulls, but it's also impacting soft pulls, which is impacting originators' ability to write loans. There are some lenders out there, like some that sponsor our event, that will pay for credit reports, but there's an issue with this. And what do you feel? What do you feel about this?
When you say rising cost of credit reports, I think what the image that always comes to mind is a sort of old time-lapse photography of a loaf of bread rising as it bakes. It goes from here to like here in seconds. That's about what we've seen with the cost of credit reports. I mean, they've increased something like, in some cases, 400%, depending on the level or how many of these that you're ordering at a time through the credit agencies. Yeah. It's ludicrous. Listen, we both agree it's ludicrous. I think it's a real problem because it's costing consumers a tremendous amount of money at a time when, frankly, the cost of concluding a mortgage in general is tough.
Yeah.
On the other hand, I'm just going to step back here for a minute because I know that you're going to fight that these should come down. And I'm going to say ostensibly, theoretically, I believe it shouldn't be as high either. But
it's free market.
It is a free market, and these agencies are going to charge what they're going to charge. I think the hardest part was that it wasn't like an incremental increase in what was happening in the cost of credit reports, and there wasn't anything that changed in the overall structure of credit reports. It was just they all said, "Hey, guess what?
There's been a change. Fair Isaac Corporation's profits are up 188%.
That's true on the corporate level. On the how do you provide the credit report, it has not changed. There's no real justification other than the justification that you just gave, which is, guess what? The market went down. We don't want our profits to go down. So if the market went down, 70%, we're going to raise our cost 3-4 times to make up for that 70% decline in overall profits. And it's working.
There's been no change in value. I mean, yes, there's some new models coming out, but really at the end of the day, we're still getting data. It doesn't cost that much more to be able to put. It doesn't cost, 200% of what it used to cost to produce those same credit reports.
No, and if it did, the people who run like Fair Isaac, they should be fired. Because if their expenses went up that much all of a sudden, they should be fired. This is a straight up money grab, is what this is. And again, at a time when it's already very difficult and very expensive for people to buy homes. So I'm not a fan of it. I understand it. I can't argue against it from a free market standpoint. Yeah. I can argue against it from a basic morality standpoint, but there's no such thing as business morality when you're facing your shareholders and trying to figure out what's going on your next quarterly earnings report.
I
you're
agree
screwed
100%.
For,
Yeah. Businesses got to do what businesses got to do.
I know that we know that like the MBA is livid over this stuff here. They've been trying to advocate against it. I don't know that they're going to get very far. I also, the big issue for me also is just like sort of the cost of things under inflation. Once transaction volume comes back up or refinance volume comes back up, these FICO scores costs, they're not going to go back down. Oh yeah. When volume increases, they're not going to go down. Profits are just going to shoot through the roof.
Yep. That's you don't really find hyper deflation hitting the service industry. That just doesn't happen.
No, and it sure doesn't ever seem to hit the mortgage industry.
No,
that's for sure.
No, it just keeps going up and up, and any opportunity that there is, we find actually ways to kind of improve our process, and we try to deliver a less expensive product to the borrowers, and in spite of all these efforts to try to actually raise the cost of borrowers.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.